The number one question I get from newer investors, newer do-it-yourself investors is really, how do I get started? How do I invest my first $1,000 or $5,000 or $10,000? It could be really challenging, right? Especially if you don't have much experience. It's real easy opening an account, with a broker, because there's so many of them now, right? Online brokers, but what do you put your money into first, right? There's many options out there, many websites and articles and all kinds of stuff out there. There's dividend ETFs and growth ETFs, thematic ETFs, leverage ETFs, covered call ETFs, etc., etc., etc. It could be very overwhelming at the beginning, and it's completely normal. So this is why in this video I'm going to show you or unveil an updated version of my free sample portfolios. And believe it or not, I first came out with a free sample portfolios on my channel 3 years ago. So this is going to be an update of that, completely free. And I'm going to make it simple, because what I realized is that there's really 3 styles of investing. If you think about it, there's growth style, which is all about maximizing your total return. There's the dividend style, which obviously focuses on dividend stocks. And then there's the income style, which is what I do, which really focuses on maximizing your passive income. So all 3 styles work long term, and there's different ETFs and funds for each one of those categories. So what I'm going to do is I'm going to give you 3 sample portfolios that each focus on those 3 investing styles to really give you some ideas, give you some inspiration to get started. These are not recommendations, they're just sample portfolios that help you start, do some initial research, and take it from there. So to really help you get started, because the quicker, the better, right? So let's go through these 3 sample portfolios together. I'll show you where you could download them for free, and we'll go through each one of them together. So just like the title says, and as you could see from the flag on the thumbnail, this video will focus on the Canadian stock market. So all the funds and ETFs in these portfolios will be listed on the Canadian stock market. So obviously, if you're a Canadian investor, this is going to be much more of interest to you. If you're American, if you only invest on the American stock market, see my other video, which is going to have the exact same 3 free sample portfolios, but with funds on the American stock market. And if you're Canadian, remember that you could invest in US listed stocks or American listed stocks in your RSP without getting any additional taxes. So you might also want to consider the American or the US free sample portfolios as well for your RSP and Lira accounts as well. Just a reminder. So let's get started. Let's check out these 3 portfolios together to really help you get started. All right, everyone. So let's get started. Let's go through the 3 free sample portfolios for Canadian investors who invest in the Canadian stock market. So make sure to download that Excel file. If it's too small, you could follow along here. And again, you look at the tabs at the bottom. This is going to be the Canadian sample tab, and the US ones are here as well. And I wouldn't ignore these if you're Canadian, especially if you're investing in the RSP and Lira, because there's no 15% withholding tax when you invest in US listed funds in your RSP and Lira. So make sure to check out the other video where I'll go through the US sample portfolios. And the third tab, by the way, I just want to point out that I do have a little portfolio and template in case you want to track your funds and your stocks in Excel. Not really necessary anymore because the brokers are so good at tracking everything for you, but in case you want to track everything yourself, you have OCD like me and you want an Excel file, want to track it yourself, I certainly use Excel, so I gave you a free portfolio template here. So let's go through them. The first one is income. So this is going to be a really for beginners. If you want to be an income investor and you're a beginner, it contains mostly covered call, diversified funds, leveraged and unleveraged, across multiple managers. So there's many covered call ETF providers or managers in Canada. You have BMO and Hamilton, Harvest, Brompton, Horizons, and more. So it could be, which ones do I choose? So I figure I give you what I feel is a mix, the best of each one. And you could do your own research, and you could start with these because they all hold a lot of the same stuff. By the way, there's a lot of overlap with the stocks. And then once you get your experience, you could really you'll know which ones you prefer because they all have different option strategy, covered call strategy. Some give a lot more yield and have less growth potential. Some give you less yield, but they'll have more growth potential. So it's probably one of the hardest things when you start as an income investor is understanding the covered call strategy of each fund provider, but it is important, but it shouldn't prevent you from actually getting started. You got to get started as quickly as possible. So let's go through it right away. So the first fund here, so this is going to be the name of the fund. If you see a star, it means that the fund uses a covered call strategy, which is an income enhancing strategy. If you see a dollar sign, it means the fund does use a little bit of leverage as well. This is the fund type, whether it's an ETF or a closed-end fund. There's only one closed-end fund in this list. Most of everything are going to be ETFs here because they're just very, very efficient. Stock symbol, and this is important, guys. This is the stock symbol of each ETF, and it's a link. If you click, it'll open the fund's website. That's where you should do all your research on, not Reddit, not Seeking Alpha or any other third-party website. You've got to look at the official information on the official fund's website for management fees and returns and holdings and strategy. All that is on their website. So that's why I put, very important, the links for each one. Alternative options, this is just if there's a very, very similar ETF, or maybe there is the same ETF that's unleveraged. I'll put it in there so you know of other options, other very, very similar ETFs. This is just a one-liner that tells you more or less what's inside this ETF. And then there's the very important column, investment percentage. So if you're investing $1,000 and you see 10%, well, I'm suggesting, 10% goes into this fund, right? Or $100 out of your $1,000. So I decided to put percentages. This will work no matter how much money you're investing, whether it's $1,000, $10,000, $5,000, doesn't matter. I use percentages here. And remember, just another reminder, again, disclaimer, these are not recommendations. They're just sample portfolios to give you some inspiration, some ideas to help you get started. So let's go through it. ZWQT is BMO's all-in-one covered call ETF, where you have a lot of BMO's covered call ETFs in this one. So when I say all-in-one, I typically mean it's an ETF that holds many ETFs. So it's very, very well diversified. HDIV and HYLD are Hamilton's all-in-one covered call ETFs. And they do have a little bit of leverage in there, 25% leverage, so nice high yield there. HDIF is Harvest's all-in-one covered call ETF solution, which holds multiple Harvest covered call ETFs. Then you have the ones from Horizons, which a lot of them have all come out this year, 2023, and they're fantastic. You have EQCL, which is the biggest position here at 15% because it's so diversified. So the best way to think of EQCL, it's very similar to XEQT or VEQT, very popular, just one-stop shop ETFs to get the best stocks all around the world. But think of it like an income version or a covered call version with a little bit of leverage. So very, very highly diversified. So you have EQCL here with the biggest position. Then you have the other three, or what I feel are the three best popular diversified covered call ETFs from Horizon: CNCC, which gives you exposure to the overall Canadian market, the whole thing; USCC, QQCC, which is pretty much the S&P 500, the NASDAQ 100 index with covered calls. So it gives you exposure to the entire US market. And there are leveraged versions of each. This is a beginner portfolio, so I put the non-leveraged versions for these three. Although I put the leverage version of this one here. But the leverage versions, in case you don't mind a little bit of leverage, which means a little bit more yield, a little bit more volatility on the same exact fund, it's very easy. It's just instead of CNCC, it's CNCL. Instead of USCC, it's USCL. So et cetera, et cetera. BMAX is Brompton's all-in-one covered call ETF. So it has all the Brompton covered call ETFs in there. There's also some fixed income in there. So you get about a 9% yield. Brompton is also another big player in the covered call space in Canada. You have EIT.UN. This is the only closed-end fund in here. Everything else are ETFs. And EIT.UN, managed by Canoe Financial, is very, very big, very, very popular. Been around for a long time. It's income oriented and it's very, very diversified as well. So it's definitely in there at 5%. So all the ones I've discussed so far are really 100% diversified. I did add a couple of more sector-specific ones, but the percentages are going to be much lower because when you're going in sector-specific stuff, you have a little bit more risk because it's sector concentrated. It's not diversified technically. So I did add HHL and HTA, which are healthcare and technology sectors, ENCC, which is Canadian energy, MREL, which is real estate. Got to have a little bit of real estate in there. And then I also put H-Bond, which is a newer ETF that came out in Canada in 2023, which invests in long-term US bonds or treasuries, which is a very safe investment, but they do covered calls on it to get you about 10% yield. So I added that one as a little percentage. So add it all up, you get 100%. Fantastic starter sample portfolio, everyone. If you, like me, want to be an income-oriented investor, and then you have the nice graph next to it with the breakdown. It's a lot nicer as well in there. So moving on, and by the way, you'll get an approximate yield with this portfolio of 9% plus. It's approximate. Obviously, it changes with stock prices, but I also put a target yield on the income portfolio because it's all about the yield, right? Moving on to portfolio, the next one for growth or total return. So this is pretty much the most common way people invest. It's for growth and for total return. It's usually the number one objective. So total return means, look, I just want to put my $10,000, $1,000 somewhere. I don't need any income now, and I just want it to grow as much as possible over time. If that's your number one objective, you're probably a growth investor. So you're probably going to be investing in passive, low cost passive index ETFs, which will give you the best stocks or access to the best stocks with just a handful of ETFs. Best stocks all around the world. So let's go through it. My opinion, the best growth vehicle of our time is the S&P 500. So obviously there's going to be a big position in VFV, which is the Vanguard S&P 500 ETF. There's many S&P 500 ETFs listed in Canada. Remember, these are all Canadian listed ETFs that invest in US stocks. So I put VFV, but there's HULC, there's HSX. Those are from Hamilton, but there's ZSP from BMO, and BlackRock has one, and there's plenty of S&P 500 index ETFs. They're pretty much very, very, very similar. So big chunk, right? Because America is the biggest economy of the world. I put VCN. This is a Vanguard, overall Canadian market. So just going to give you all the stocks in Canada and very low cost. No stock picking needed. 5% there, 5% in VIU, which is developed economies outside of North America. So things like Europe, Australia, Japan. VEE, a little bit in VE as well. That's emerging markets, things like China and Brazil. So, with these, you pretty much have some very popular Vanguard passive index ETFs that give you access to stocks all around the world. There is HXQ, which is the NASDAQ 100. So it's kind of an overall American exposure as well, kind of like the S&P 500, but really focused on less companies and the companies on the NASDAQ, which are more technology focused. So I did put 15 instead of, I put more in the S&P 500 because this is a little bit more technology focused, but still a very important growth driver. And I did put the Horizons one because I think it's the lowest cost one out there, 15% weighting here. The biggest percentage or the biggest investment here is 40% in HEQT. So I'm sure you know what VEQT is, XEQT, ZEQT, HEQT, very easy to remember, right? Because they all end in EQT. These are basically all-in-one passive index growth ETFs. So they're typically ETFs that hold other passive index ETFs to give you the best exposure all around the world. So typically there's a Canada one, there's a US one, there's an S&P 500 one, a NASDAQ one, emerging markets, and a developed outside of North America. So it's kind of like a one ETF to rule them all for growth. Very, very popular. If you want to just buy this one ETF, you can, and you'll have the best stocks all around the world. I decided to add some other ones as well, which are pretty much included in the EQT. So 40% there. I just chose the Horizons one because I think it's actually outperforming the BlackRock and Vanguard ones, and it's very low fee as well. So that's why I chose HEQT. But again, they're in the alternative options column, right? VEQT, XEQT. You could choose those ones if you're more comfortable with the big boys, Vanguard and BlackRock. Last but not least, a 5% in real estate, because real estate is represented very, very little in typically, index ETFs. There's not much real estate exposure there. So I added 5% in MREL, which in my opinion is one of the best REIT or real estate ETFs in Canada. So that's your growth portfolio. Really is for maximum total return over time. Last but not least, again, these are not recommendations, guys. You could feel free to shop around and there's notes, and make sure to read everything here because I did take the time to actually give you as much information as possible. There's plenty of S&P 500 and NASDAQ 100 ETFs. It's, this is just a sample portfolio to help you get started. Last but not least is the dividend portfolio, which focuses on dividend stocks, right? ETFs that only hold dividend stocks. So I chose a few here that will give you access to some of the best dividend stocks all around the world. VDY, very, very popular, focuses on Canadian dividend stocks. CUD from BlackRock focuses on US dividend stocks. CYH, not as well known, focuses on really dividend stocks all around the world. So you have some of the best global dividend stocks. MDiv from Middlefield, a lesser known fantastic dividend ETF. Again, global dividend stocks, a nice healthy position there. ZDH for international, which means stocks outside of North America. This is managed by BMO. REM from managed by Purpose. Emerging markets, emerging market dividend stocks. MREL again, REITs are obviously good dividend, give good dividends. So real estate's going to be there, 5% there. And because Canadians love the Canadian bank so much, I did put 5% in HCAL, which is a really cool ETF. It holds the big 6 Canadian banks. No covered calls, so you're not giving up any upside, but it has 25% leverage. So if you're going to hold this for a long time, or the Canadian 6 banks for a long time, you might as well add a little bit of leverage to really boost your yield and return over time. So I did add HCAL managed by Hamilton ETFs there. So these are the 3 sample portfolios, everyone, for 3 different styles of investing: dividend, growth, or income. All 3 styles work well long term. It's really up to you to choose which one works for you. Or of course you can mix and match as well, right? A lot of people do that. And you might be asking, okay, well, it says portfolio 1, then 4, then 6. Well, these are actually 3 portfolios from out of 10, 3 out of 10 from my digital product, the Ultimate Investing Package, which I just released version 5. So if you like these sample portfolios and you want more, like a streamlined dividend portfolio, a streamlined income portfolio, an aggressive growth portfolio, aggressive income, maximum income portfolio. I have 10 sample portfolios in this product and a lot more more than one portfolio templates. There's 2 portfolio templates there. There's a list of 300 ETFs like you see here that you could do individual research on, etc., etc. So if you're interested, just click on this link here and it will bring you to my website, my product page, and you could read all about the product. I strongly suggest to watch the video. Okay, before you buy this, it's only $99 Canadian, by the way, and it comes with free lifetime updates. So you only ever have to buy the package once. I do intend to do an update or a new version every single year. I do try to make this product better and better every single year. I add ETFs. I change a little bit the sample portfolio. So if you're interested, if you really like the sample portfolio, guys, I strongly suggest you watch this video. Watch it before you buy it, and if you like it, pick it up. It's only $99. You only have to buy it once. I would really, really appreciate it. And just to reminisce, it's funny because the last time I did free sample portfolios was in June 2020, like 3 years ago. I was a lot whiter, of course, because I'm still in Canada, but I did have more hair, I have to admit that. But I just find it, just reminiscing, pretty crazy that this was actually 3 years ago. So again, download the product, the sample portfolios for free, guys. It's on my website. Just click on free tools and resources. It will be the second download here. Just don't do it with Firefox or you will enter the matrix. So hopefully these sample portfolios, the whole point of them is to give you some ideas and some inspiration to get started, no matter what your preferred way of investing is, whether it's income, growth, or dividend. I think all 3 invest in a lot of the same stocks and they all work well long term. It's just how you get your return that's a bit different. So hopefully you enjoyed them and they're useful, and you invest as soon as possible, because that is really the key. You got to go as quickly as possible. So thanks again. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or companion or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the Elite membership. If you're interested in the Elite membership, and even if you want to start out with the free membership and upgrade to the Elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the Elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.